Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,000 stocks and ETFs. With me today is David Blake, CMT, here to discuss what happened last week and what we should look for as we go into the market this week. I also hear we may be looking at some charts today, so it's a good one to tune in. David, how are you today?
I'm doing well, thank you.
Great, let's jump right in.
Okay, we had a second week of gains last week in the major averages, which was nice to see finally. We started out with kind of a bang. We had President Trump call off more attacks on Iran, and we had a big bump on Monday. Mostly it was people jumping into AI-related big cap tech stocks and Mag 7. We saw oil prices go a little bit lower, and it also saw yields nudge lower. As long as oil prices can stay lower, that's going to help out on the inflation front. And then on Tuesday, we got a real big bump on Tuesday after Treasury Secretary Bessent came out and said that we're going to have a deal on the Strait of Hormuz maybe later that day or the latest the next day, which didn't turn out to be right, but the administration seems to always think we have a deal coming through. But anyway, the major averages were sharply higher both Monday and Tuesday for a fourth consecutive session. And at the same time, we had the S&P 500, the NYSE, and the small cap Russell 2000 joined the Dow Jones at a new record high. We're talking about jumping into tech stocks and AI related stuff. Again, the Philadelphia Semiconductor Index on that Tuesday soared 6.5% on the one day. That helped the technology sector jump almost 5% on the same session. So that was a great start to the week last week. Okay, then we had a little bit of a pause midweek, and that was mainly on the back of Advanced Micro Devices earnings, which were pretty much blowout numbers. There was a little bit about the spending, I guess, that caused a little bit of concern. A lot of these big companies, how much the CapEx spending is having some investors worried about that. And I think we saw about a 10 or 12% drop in AMD, but it bounced back pretty quickly later on in the week. We also saw a pretty good drop in Alphabet, Google, and that was caused by some reports about that they were going to shake up their AI leadership. And that sent the NASDAQ actually lower, leaving the broader market mix. But most of the indexes were a little bit higher towards the end of the day. In fact, I believe the NASDAQ was down about 350 points on that Wednesday early and then battled back. People bought the dip, and I think it was only down 55 points at the close. So people jumping in on that. We kind of a little bit mixed on Thursday. We had more concerns about a deal between Oman and Iran about the Strait of Hormuz, and they were going to ban the U.S. and Israel from passing through. But then we got a bounce on Friday again, pushing some of the indexes back in the record highs after we had a weaker than expected jobs report. Now, some of you wonder why that would happen. And the reason we lost 23,000 jobs, and that people were looking for 83,000 new payrolls for July. The reason that would cause rates to come down a little bit is because that leaves a little bit more wiggle room for the Federal Reserve in September so they don't have to raise rates. So, they're thinking, well, maybe the labor area is getting a little bit weaker. That may be something to push the pause button here on higher rates. So that's why we saw that. Wage increases were also light month over month and year over year. Again, that caused the rates just to pull down a little bit, not a lot, because other than that, things are still going along pretty strong, and they still may have to raise rates. Right now, it's about a coin toss, according to the CME FedWatch rate right now. Okay, later on in the week here, as we wrapped up, we had 8 of 11 sectors traded higher during the period. Technology was the strongest market group last week. It was up 7.20%. And we also had good gains in materials, consumer discretionary, industrial, and communication services. They were also sharply higher. Energy was the weak link, again, because we saw oil prices come down. That hurt that. And then we also saw utilities take a little bit of a hit. But at the end of the week, we were up for a second straight week, and that was nice. And we had the Dow Jones, the S&P 500, the equal weight S&P 500, NYSE, and small cap Russell 2000 all hitting new highs. I want to just show you a real quick chart over here. And we talked for a couple of weeks during these meetings where we saw the SPY, the S&P 500, how we talked about it was forming kind of a triangle pattern that usually we weren't sure which way it was going to break out. So when you have a triangle pattern like that, they don't always resolve with a, breakout to the upward and downside. And what happens, and what I think we had now was you end up extends past the triangle area, and then you end up with a trading range, which we talked about here the last couple of weeks. And as you can see right here, okay, we're kind of in that sideways trading thing here. And finally, we break out to the upside. That's a big thing to watch, because when they break out of these, sometimes you can take from the bottom to the high, use your fingers to measure that, and then you can figure out maybe if the first target would be. Let me turn this thing off here real quick. And that would probably put a target range up here on 7980, 7900. That's something for the S&P 500. So that's something to watch out while we're going forward. I also had a couple questions during the week about the CTI and how we went from a minus 15 or minus 12 a week or so ago to a plus 9 and a bullish market posture. Yeah, it's too bad when you have to switch these things when the market's making new highs, but that's how these cycles are. We had to reset 4 of the 5 cycles in our CTI market timing model. And that's why you're having this big jump up here. And they actually are scheduled to stay positive into October. So, normally we talk about the weakness in August and maybe even into September. I'm not so sure we're going to see that this year. If the cycles are correct, and they are a forecasting tool, not a trend following like the second opinion is. If they're correct this time, we should have a fairly nice market going into the fall, and a lot of people would be expecting ominous trading in August and September. So that's something to watch. Now, another thing that I wanted to show you over here, we've talked about this before in the past too. This is the XLY, it's consumer discretionary. And now we're going to look at the XLP, which is consumer staples. And what we've talked a little bit about before is when the market is growing and you're looking at more growth and momentum stocks leading the market, you'll see the XLY outperforming the XLP. And as you can see over here, over this last couple months here, when you really didn't have the market going in any direction, you had both of those kind of going sideways. And right over here, which is like not last week, but actually the week before, we finally saw a breakout with the XLY, where it's now outperforming the XLP. And that's also a little bit of a confirmation that's showing us that now the growth sectors are outperforming the consumer staples and the defensive areas of the market. So that's something you can pull up once in a while yourself on these charts and just do a little comparison to make sure that we're outperforming. Now, like over in here in 25, when we were having the big rally, obviously, if you pulled this up, you certainly wouldn't be looking to buy defensive positions. You'd be buying Mag 7 and the high momentum, big cap tech stocks and stuff like that. So that's something just to put on your screen there to watch. Okay, now as far as the technical condition of the market goes, we did see some good improvement last week. We actually could have probably gone to a buy the week before, except if you read the market letter, there were so many different mixed signals. Mainly, one of the things that bothered me the most was that despite the Dow not making a new low, but was only by 8 points, you had the new intraday lows in the S&P 500, the NASDAQ 100, the S&P 500, the small cap 2000. And that's kind of a sign that you may not want to reset the cycles when that's happening. So, but last week, none of them made a new low, and that had us switch over to the positive CTI and bullish market posture. So that's something we'll keep an eye on for a while. Remember, it's a forecasting model, but it has a great track record going forward. And historically, J.M. Hurst came up with these cycles that a lot of traders follow, and it indicates weak and strong areas of the market based on how the cycles are going. So that's something we kind of like. Now, as far as the different indexes go, we did see the NASDAQ and NASDAQ 100. They finally retraced more than 61.8% of their June to July tumble. Usually when they do that, they go on to make new highs, which I'm expecting to see in those two indexes probably in the next week or two. We also saw all of the different indexes close above their 50, 100, and 200-day moving averages. That's a big plus for the market going forward. That's pretty much its confirmation that on an intermediate term, we're bullish. And then we also had the MACD, which is a short-term trend gauge. We had bullish crossovers in that. We also had the momentum measured by the 14-day RSI strong. The Philadelphia Semiconductor Index and the S&P 500 Index also had point and figure double top breakouts, which is kind of nice. Let me show you that real quick. Let me pull up the SPY. Yeah, point and figure charts are nice because one of the things about them, they don't take into consideration time. So it's basically just all on price action, whether we're going up or we're going down or we're breaking out or not. And over here, you can see last week we had the double top breakout, which is a buy signal to traders. And that's something that, again, we should probably see this move a little bit higher. So that's something to consider. It's also a confirmation of what we're doing here. Okay, now I'll also talk a little bit about the different sectors, which we're going to look at here in just a second. And we had 9 of 11 sectors last week were trading above their 50, 100, and 200-day moving average. We had financials, industrials, healthcares, and REITs all hit new highs. And then we had materials, consumer discretionary, mere points away from what was going on there. If you take a look at this over here, we talked a little bit about Google having that big pullback last week. If you take a look at the communication services from last week, here's where we had the Google falling back, and especially that big drop in Meta that same week. We came down here, had a nice double bottom. That's a chart pattern that traders look at. You come down here, you find support at this area, you bounce up, you come back down, hit that same area, and you bounce again off of it. Almost had a triple bottom over here. But this, once we came in over here, we started to pull up. You now have the communication services sector probably going to pick up a little bit of steam over here, and we'll probably see that outperform going forward. Okay, also we had a nice pickup in underlying breadth. The week before, when I did not change the posture to bullish, basically the AD lines for the NYSE and the NASDAQ were flat to a little bit down, I think, on the NASDAQ. If you come over here, look at our market at a glance, we'll pop over here, and here's the New York. This was going into the week before. We look at this, I'll enlarge it a little bit. You kind of look at this as a leading indicator of market direction. And over here, all of a sudden, you're struggling. You kind of got a nice bump there. Then as the rest of July, you kind of going sideways to down a little bit, not much action. That's not a sign of positive divergence. Now over here, this is just confirmation of the breakout that we just had. So that's a good sign. You want to see this thing going in the same direction. And normally you'll see this thing top out or bottom out a couple of weeks before you see the market actually turn around. So that was a good sign to see. Again, this sideways action, this kind of was worrisome, because even though you were up near new highs in the Dow and the S&P 500, you just weren't getting that broadening out of the market like you want to see if you're going to get a true breakout. And over here is the NASDAQ. Again, another reason to keep me on the sidelines just a little bit. Here's the NASDAQ AD line, which is not as important because you have a lot of stocks in here and you have a lot of junk stocks in here that sometimes people, when the market looks good, they'll get rid of some of their junk and start piling into some of the better stocks. So this was, again, not confirming that we're getting a positive breakout until all of a sudden you saw this. Then last week, I think we picked up about 5,000 units on the NASDAQ. So that was a good sign and a good confirmation that the NASDAQ was in the process of breaking out with the Dow. So that was also good. Okay, I wanted to touch base real quick on the sectors. And when I talk about that, is you want to be invested in the right sectors. You know, there's that old saying that a rising tide lifts all ships. And that's especially true in the market. If you have something like utilities, they're falling out of bed. Let's take a look at that. Okay, you have this over here. You don't want to be buying stocks, utility stocks, when you look at the sector chart and it's going like this. Okay, now maybe we get a little bit of a double bottom here and there. You have to see on that, see what's going to happen. But you want to be looking at sector charts that are looking great. Now let's just take a look at this. Financials made a new high here not long ago. Okay, look at this. This is the whole sector. So you may not own JP Morgan, but you might own one of the second and third tier stocks in the financial sector, and you're probably still making money. So that's why you want to look at these sectors. You always want to be in the right sector when you take your stock list and you pick out what's working and what's not working. You want to go there. Now, one of the things that we have recently added that I really like is called segments. You know, a little bit different than the industry group. because it actually breaks it down a little bit even narrower than what some of the industry group things are we have. Okay, so if you go in here, like you've been reading recently, and this has been about the third week that's been at the top here, you're talking about the new movie Odyssey and about all the stuff going on with Discovery and Warner Brothers and all this kind of other stuff and AMC. And here, surprisingly, movie theaters is one of the top segments in the market. And again, here you're looking at this thing. It's been going on for a while here. If you're reading about all this stuff going on, and all of a sudden you would come over here, okay, you look at here at AMC. But these are some of the different movie theaters. The power rating on all of these are 90s and 80s. They're all rated long. And this would be an area that if you're reading, like what was the guy from Fidelity? But anyway, he would always say, if you went to the mall and you saw all these people piling into the stores at the mall, you should have been very rich, because you just look at what you see. If you see something really going strong, that's what you want to invest in, and invest in things you know about. So if you read in the papers and all about how strong, Odyssey is and how it's bringing people back to the theaters, this is an indication of something that you would have looked at and gone, okay, well, look at that. Not only am I reading about it, well, certainly on MarketEdge, they have movie theaters ranked as one of the top segment in the market right now. And it gives me a couple stocks I can look at to buy. Then you can go on down here and look at the other things we have. We talked about financials. Come on down here a little bit. Okay, insurance brokers. That's still ranked in the financial sector. And if you look at here, you've got a lot of things rated long on these things. Hit the power rating, a lot of them up here in the 80s. You have Baldwin Insurance Group, Twig Common Stock, Willis Towers, AJC, Brown and Brown. A lot of these things, you'll probably also go back here. We can probably find some of the money center banks. Here's property and casualty insurance. I personally own Travelers. It's in here. Travelers, Allstate. Look at these charts on these things lately. Here's Allstate. All of them looking like this. They've been flying. You'd have to do more reading on these, but again, it's the financial. I think one of the reasons that XLF ETF financial looks so strong, one of the reasons is because of these stocks like this. The insurance companies have really just been flying here lately. And if you expand this out even further, okay, we could go on. Here's payment network of services. They would be in that financial segment. Other insurance, they're up about over the last 30 days. Look at that chart. Again, it's heading up. Here's other banks. Other banks have already broken out to that. So these are places where you can look at, once you find those sectors that are making new highs, go into this and find out what parts of that sector are breaking out. It's because it's not going to be everything. Sometimes it might be the money center banks, and then you'll get the regional banks just aren't quite, maybe they don't have the loans or whatever that the big money center banks have. And that would be a reason for you to stay away from those and just go into the money center banks. All right. But this is a very interesting area that once you get your screens in for your stocks, that you can go to and look at and find out which segments in that sector are the strongest or causing those things to break out. One last thing here that I want to go to real quick. If you go to advanced tools, probably a lot of you don't really use this a lot. The point and figure breakouts, like we just talked a little bit about S&P 500 and the Philadelphia Semiconductor Index having double top breakouts. If you go into some of these screens, let's go into, I will go into breakout. This is fine. Okay, if you look at the top looking sectors, and then you come in here, okay, let's just try to find out if there are any financial stocks, banking stocks, or insurance banks that are starting to break out. I don't see anything quite yet there, which is surprising, because a lot of the times you'll see these things really starting to break out. Let me go to early entry buys, because I look at this once in a while. Now this way, go in here to the point and figure earlier alert buy signals. And if you go down and you'll find something, here's Allstate Insurance coming up as an early entry buy. Let's take a look at that. Okay, it's getting ready to do a double top breakout on itself. What's this trades above a certain price here, probably 275 or so. You're going to have that breakout on the point and figure chart. So a lot of times what I will notice is that when I find the right segment, I look at the stocks in that segment that I want to buy. I will also do the screen on the point and figure charts, and that will then tell me what stocks are getting ready to break out in some of those different segment groups. Another thing that you can also find in this once in a while, which is kind of interesting, if you pull these up and you just start to look down to see what companies are close to a double top or a triple top or quadruple top, you'll find all of a sudden, you might look at that and you say, wow, there's 5 housing stocks that are on this list that are all getting ready to have a triple top breakout. What's that tell you? That tells you that the housing stocks are getting ready to break out in a big way. I'm not saying that they are right here, but that's something that you can look at as a way to find something that is actually going to break out. Now, here's a home builder supplies. Okay, they're getting ready here. They're having a big sell-off. That's the stock, some of the home builders and all that. They're getting ready to have a triple top breakout on the Direction Daily Home Builders ETF. Now, this is a triple leverage thing, so it's a little bit more dicey, a little bit more speculative than what you may want. But if you see a breakout in this thing, this means that you're probably going to have quite a move. I'm not going to get into it here, but another way you can look at this is 1, 2, 3, 4, 5, 6, 7 rows over here. If you add 7 to this, that'll give you your target for where this would probably go after you have that breakout. If you have a question about that, you can always send me an email and I'll try to explain that or send you something on it. Okay, I want to wrap this up because I already have gone too long, but those were just a couple of things that I wanted you to take a look at. One last thing, I think it's Wednesday and Thursday of this week, we get some key inflation data. We have the CPI coming out on Wednesday. At this point, I think they're looking for an increase over the month of 0.1 of a percentage point. This is for June. And then 3.4% year over year. And for the core CPI, they're looking at going up, I think, 0.2% but only 2.5% year over year. So if it comes in, if there's an upside surprise, that would probably cause that coin flip of a rate hike in September, maybe to increase. But we'll have to see how that plays out. And then on Friday, you get the University of Michigan Consumer Sentiment Index coming out. They're looking for a reading of about 54.1. That's only about 1 point lower than we saw the prior readout. And I think they're looking for year ahead inflation with that at about 4.2%. So that's a little bit high. We'll just see how that comes in.
Very good. Thank you so much, David. And as David said, if you have questions for him or anyone else on the MarketEdge team, you can reach out by sending an email to support@marketedge.com or drop a comment below if you're watching on YouTube. We love hearing from you guys. If you'd like to get technical analysis on over 5,000 stocks and ETFs updated daily, check us out at marketedge.com. All right, thanks so much, and we'll catch you next week.